Hare Krishna. Welcome to Tax YouTube channel. This is C. Rohanar Pingre, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Today we are going to discuss on a topic overview of the Income Tax Act 2025 and we will compare with the 1961. So let's dive into it. Let me allow to share my screen. Yes. So we will first understand the overview of the Income Tax Act 2025 versus 1961. And after that, we will also have Q&A like session. You have to answer on your own by listening there after this 5 to 7 minutes discussion on the overview. So how much we will understand, we will see. So let's start with it. So the new act is not about changing any tax policy or increasing the tax burden. It is what primarily about the change in what 64 years of patchwork amendments that had made the old law very complex with hundreds of provisos and explanations. We all know that. The government has recognized everything into fewer reader-friendly sections without altering rates or core principles. So think of it as upgrading from a bulky old software to means bulky old software of full of patches to a clean modern version of software. So how many of we have see the struggle with the layered provisions and explanations while reading the 1961 Act? Many of us, almost all of us, like so. New Act aims to reduce what litigation and compliance friction significantly. So one important change is that the term previous year and assessment year have been replaced by what single simple tax year concept for better clarity. That is the most important change over here. Let's see key structural changes old versus new. So the biggest visible change is what renumbering and the logical grouping of the provisions. For example, all TDS and TCS provisions, which were earlier scattered across the dozens of sections from 192 to 194T, are now consolidated into just two clear sections, that is section 392 and 394 under the Income Tax Act 2025 and presented in what easy to read tabular format. So similarly, written provisions are now unified under single section 263. Earlier 139, then there are subsections, many subsections like 139 subsection 1, 3, 5, 4, like that 9. So now it is consolidated under section 263. So new act makes what heavy use of tables and schedules instead of the long para, which has reduced the overall word count by almost the half of the from old to new act. So this mapping utility on the income tax portal will be very, very helpful for all of us during the transition. I know many of us have not accessed our income tax portal for this mapping utility. I am requesting you, all of you, to go and access this mapping utility. Very, very useful for all of us. Let's understand transition period, important for all of us. So the transition period is extremely important for what all of us and our corporate clients. So financial for the next filing season, that is covering financial year 25-26, relevant assessment year 26-27. Even if we are filing return in July to October 2026, we will still use what old Income Tax Act 1961 provisions and the old versions of ITR 6. We remember this. Means for filing FY 25-26, that is relevant assessment year 26-27, we are going to use for corporates filing ITR 6. Means old versions of all ITR. For individuals also ITR 1, ITR 2, old version. Nothing has been new sections or all like that are quoted in the new forms. Everything would be old, and old Act 1961 would be applicable. So the new act and its section numbers will apply only from the financial year 26-27. That is what? Tax year 26-27 onwards. So existing options such as 115B AA or 115B AB accumulated MAT credit relevant to the corporates, all approvals will continue seamlessly due to the saving provisions. So the portal will handle the dual compliance during this 26-27. That is for PAN applications, TDS returns. They need to means portal will support both Income Tax Act 1961 and 2025. So we need to be prepared to reconcile old and new references carefully in the transition year. So always advise your client to maintain the parallel records during the period to avoid what? Any last minute surprises. So now we will see whatever we have discussed from last 5 to 6 minutes. We will see how much you have understand the overview, that is the basic understanding of the new act versus the 1961. So let us start with the Income Tax Act 2025 replaces which act? Income Tax Act 1961 or Finance Act 2025? Yes, it is Income Tax Act 1961. Ask this, even if we are not in front of you, you are not in front of me, but you can see whether whenever I'm asking, try to answer it, because we have discussed all these facts just before a 5 minutes. So let's start. From which date is the Income Tax Act 25 it will be effective? 25, 1st April 25 or 1st April 26? Yes, 1st April 2026. How many sections were there in the old Income Tax 1961? 819 sections or 536 sections? Yes, under Old Income Tax Act 1961, 819 sections were there. And under Income Tax Act 2025, there are 536 sections. So almost half of from the old to new. How many schedules are there in the Income Tax Act 2025? 14 schedules or 16 schedules? Please think. 16 schedules. Yes. So in the new Income Tax Act 2025, there are 16 schedules. Next. New Act focuses mainly on what? Increasing tax burden or simplification and logical grouping? Think over it. Yes, simplification and logical grouping. I hope you are giving the answers, and that is also right. Simplification and logical grouping in a new act. Which new concept has been introduced in the new Income Tax Act 2025? Assessment block concept or single tax year concept? Yes, of course it is. Single tax year concept is introduced. Means no, there is now no previous year, assessment year, financial year. So the layman also understand now the tax year concept is used for 1 year. That is the tax year. That is the one word. The new law aims to reduce redundancy in provisions or corporate tax rates. Yes, there is nothing change in any corporate tax rate. So redundancy in provision is reduced. Under the new act, the number of chapters remains 23 or reduced to 16. Think over it. Yes, it is not reduced 16, it remains 23. The chapters in the new act is 23. Old also 23 and new act also there are the 23 chapters. Next. TDS TCS provisions under old section 192 to 194T are now consolidated in section 392 to 394 or section 263 to 265. We have discussed section 392 to 394. Yes, section 263 is for the return filing section. Return filing provisions are unified in already answered. That is new section 263 and new section 139 is a old section. Which of the following has been rationalized under the new act? Definitions, schedules and forms or GST rates? Of course, definitions, schedules and forms. GST is not out of the question. A mapping utility, very important. A mapping utility for old and new section is available on which portal? E-portal Income Tax GOV or Income Tax India gov.in? What do you think? I know you are not yet access that, so you don't know. A few of you will maybe know from where it is mapping utility accessible. It is from incometaxindia.gov.in and not e-portal. E-portal.incometax is for the e-filing portal. So that is not this mapping utility is not available on that e-filing portal. It is available on incometaxindia.gov.in. Next, the content under various chapter has been expanded randomly or streamlined. What do you think? Yes, streamlined. Financial year 25-26 will still be governed by Income Tax Act 1961 or Income Tax Act 2025. It is by Income Tax Act 1961, financial year 25-26, corresponding assessment year 26-27. From financial year 26-27 onwards, which law will apply? Or tax year, from tax year 26-27, which law will apply? Income Tax Act 2025. FY 25-26 correspond to which assessment year? Assessment year 26-27. Existing approvals, credits, and options will lapse automatically due to the new act or will continue through savings provisions? We discussed. Think. Yes, will continue through savings provisions. Hope you have given the right answers. Mapping of old forms to new forms includes what? PAN and TDS returns or GST registration certificates? GST out of question, PAN and TDS returns, of course. And the tax year 26-27 concept starts from which year? 25-26 or 26-27? Of course, it starts from 26-27. So the practical takeaways from today's discussion. Read FAQs from Income Tax Portal for transitional clarity on various provisions. This is a 100-page document. Try to read it, summarize it, gives every question or answer in your mind about the new act and old act, what applies, what provision, and this and that. But take a time, take a 1 or 1.5 year. You can read this 99-page document of FAQ, but it clear many questions in your mind. Update all tablets with new section numbers. Very important. Maintain mapping sheet for old versus new during 2026 transitions. Means as a professional, we need to have a one-page summary or whatever applicable to you, your client. You need to summarize and keep in your front on your desk or on the screen of your laptop at least for next 6 to 9 months, so that you will be adopt the new sections, new forms from the 26-27 tax year onwards. So use portal mapping utility for smooth shift. Very important, as I said. Go to the portal and access it. You will definitely like and value that initiative taken by the income tax portal. So that's it for today. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, email, or you can also comment below the video. So if you are not yet subscribed to Tax YouTube channel, then do subscribe for latest updates and video series like this. So hope you are gaining valuable knowledge from all those updates and video series which we are conducting on a Tax YouTube channel. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.